So, Mark Posniak, thank you ever so much for taking time out of your no doubt busy schedule at the moment to have a chat with us on the Game of Loans podcast. Mark, just to I mean, a lot of people are going to know who you are, who are listening to this podcast, because you're pretty much everywhere on social media, especially on LinkedIn with Octane. But did you want to start us off by just giving us about a 5-minute background on who you are and a little bit about Octane, and then we can start discussing the C word, which is on everyone's lips at the moment.
Pleasure. So thank you for that, Sam. I am Mark Posniak, Managing Director of Octane Capital, the UK's first productless short-term lender. And we were the founders and pioneers of the third generation of short-term lending. We started our business in 2017. The three founders were myself, my two partners, Jonathan Samuels, who's our CEO, and Matt Smith, who's our Director of Credit and Risk. The three of us worked together for a long time before at a previous lender. Together we did more than £2.5 billion worth of loans there. We've done more than 700 million in our two and a bit years here. And yeah, we're having a lot of fun, although could be doing things slightly differently in light of what's currently happened over the last 10 days or so.
Yeah, well, this is why I was so interested to get you on, Mark, because this is going to sound awful when I say it, but you've been around the block. You know what you're talking about. You've seen ups and downs. You were certainly in the market when we had the credit crunch, what seems like a lifetime ago now, and you've seen the market dip with Brexit and all that kind of stuff. And I thought you're probably going to be a great person to give people in the property market, developers, investors, those kinds of people, some insights into the lending market and how we're going to cope, I suppose, over the coming months. But what's your week been? What's the last sort of 7 working days or so been at Octane? How have you been coping?
You know, it's about taking stock. The last 7 days, 10 days is actually understanding where we now are and what the new reality is. And the new reality feels a lot like when we started the last business, which was in the height of the credit crunch, with the equilibrium shifting slightly. But nobody knows what this real position that we're in right now is, other than the one thing that is certain is that the boom days have been put on hold. And the market, which was just going like this the whole time, and yes, we had a couple of peaks and troughs, but ultimately we've had it good for a good number of years. And you know what, this correction, and it will be a correction, I don't know how long it'll last for. Nobody can. One thing I can say is that the fundamentals of property haven't shifted all of a sudden. So there is still a lack of supply and demand in terms of the UK residential property market. And what might shift that is unemployment. And if unemployment shifts, then that will have a big effect. But I think the government has been phenomenal. I think Rishi and Boris have both they've gone way above where anybody ever thought. I mean, not did I ever think in my lifetime would I see the government stepping in to pay 80% of people's wages and to try and keep everything afloat. But these are unprecedented times. In terms of our week as a whole, we are trying to act as measured as we possibly can. What does that mean? I mean, we're not just going to shoot from the hip. We're going to take stock. We're going to understand where the market's at. We're going to understand where the exit lenders are at, and we're going to then act appropriately. So have we shifted appetite? Yes, we have. Absolutely. And it would have been crazy not to. But we haven't said we're not lending. We haven't said, okay, well, we were at 70 or 75 before we're now at 50, because that's just a number. And that's never been the way we work. You know, as a productless lender, we've always priced and structured deals according to the risk that they pose to us as a lender. And it's no different whether you've got good times or bad times. You will assess a deal on its merits, and that is the quality of the asset, the quality of the borrower, and how likely it is for you to get paid. Now, some of those things you don't know right now, because you don't know how likely you're going to be repaid, because you don't know the state of the property market, and you don't know what's going to happen to valuations. You don't know what's going to happen to buyers. You don't know how valuers are going to actually react right now. You also don't know how everybody's actually going to take stock of the situation in terms of employment, and are they going to be able to pay? So if you've got a buy-to-let property, are you going to have borrowers and renters who can pay their rent? The fact that the government has said, yeah, go take a 3-month holiday, and by the way, lenders, you're not allowed to enforce or take any action over the next 3 months as well. I mean, I've never experienced that in my entire life. And as a lender, our approach is we're going to just deal with every single situation on a same way that we underwrite cases, on a deal-by-deal basis, and try and be as fair as humanly possible.
Yeah, and actually, that's quite an important point that you've mentioned. I'm trying to think of any other lenders that are. I think you are the only productless lender out there, and so maybe that gives you maybe a unique standpoint of looking at the rest of the market. I'm obviously seeing a lot of change. They deem to be changes that are probably negatively viewed by investors and developers, i.e. the two big things seem to be that interest rates aren't going down in accordance with what Bank of England have sort of set out. In fact, in certain cases, we're seeing increases across the board. And certainly we're seeing loan to values decrease. Do you think, from your unique perspective, that those lenders are right to be taking those precautions?
Yes, I think they are right to take those precautions, but risk is more than loan to value, and always has been. Some lenders, that's their only mechanism to gauge risk is loan to value, because ultimately loan to value has historically been your friend, and leverage is always going to be the safest way for you to take the pressure off. But it's more than that. And the reason why a lot of these lenders are having to act that way is because they don't know how they're going to be repaid. They have to take stock, and until they know exactly where they're at, that's the one mechanism they can use, the one lever, as our director of risk, Matt, always says, because you've got levers, you've got loan to value, you've got price, you've got the borrower, you've got all these different levers that you can play around with. So, you can add personal guarantees, you can add debentures, you can lower the leverage. I'm sorry, somebody keeps calling me, so I apologize for that.
But all that happens is you advertise the Octane Capital badge on the screen. That's good.
Even better. So, I lost my train of thought a little bit there, but yes, do I understand why they're doing it? Absolutely. Have we shifted in terms of leverage? Yes, we have. But it's not just a blanket, we're 5% down, or we're 10% down, or whatever it is, because ultimately having no products allows you to look at it on a pure risk basis anyway. Mm-hmm. So we are still paying out deals that we agreed before. We're assessing every single one of them before we pay them out to make sure that the deal still makes sense. And thank goodness, in 99% of the cases so far, they have, and we've paid them out. Yeah. On one or two, they haven't quite made sense, and we've had to go back and see if we can restructure the transaction, because ultimately, as a lender, you don't want to put yourself in a situation where you're going to lose money and you're guaranteed to lose money. Nobody wants to do that. And people so far have been pretty understanding about it.
Good. And the other thing that I mentioned there was interest rates and on the whole, thinking more, I think, so from a mortgage perspective at the moment, because they're usually the lenders that will have more fixed style products. They do tend to be, we're hearing that they're going up. Do you think that the reason behind these are, I suppose, for lenders to try and increase their margin to the point of mitigating any losses that they're likely to see through the year?
No, is that not? I don't think it's got anything to do with mitigating losses. I think it's actually pricing for risk. And any loans written today, which have been, the world that we know today is not the world from 2 weeks ago. And you have to understand, from a lender's perspective, I'm assuming that they're not going to write slightly higher margins to offset some losses from before. It's actually pricing for risk. It's very similar to what we do, other than we don't publish a rate sheet. We put you, as you would know, in control. We say to you as the introducer, this is your client. What's the most important thing to them? Is it leverage? Is it price? Is it fees up front? Is it fees at the back? And we structure it together. But we're unique in that respect. Most people in the short-term lending space in particular have a fee up at the front, a monthly interest rate. Some charge exit fees, some don't. And ultimately, it's a take it or leave it, and here's your fee, and away you go. Yeah. We thought that model was broken, which is why we launched what we did.
Yeah. And I suppose we were sort of talking off air a little bit about relationships and those kind of things. I've been saying a lot over the last few weeks, I suppose, as the coronavirus issue grew. But I truly believe that in every adversity, there is opportunity. You know, do you see positive opportunities for lenders in this?
Massively. Let me explain one thing to you. We started our previous business in the height of the credit crunch. Mm-hmm. We understand how to do deals when all those around you are too scared to. Because just because we're going through a crisis doesn't mean the world is falling off a cliff. Yes, we're in a really scary situation, but if you can hold your head while all those around you aren't, there is a huge opportunity for those to come through sailing the other side. Now, I'm not saying we're going to take silly risk over this period, but I am saying we're going to continue to lend throughout. And provided we can get valuations, provided we can get our clients to sign the docs securely and in a way that still protects us and them, then we will do everything we can to support our brokers and to support our clients through this period. I want to add one more thing, and this is probably even more important, Sam, in times like this. And you've seen me on social media a lot shouting about this, and I apologize because sometimes it feels like I've got a broken record here, but I'm passionate about it. And what's going to define relationships and lenders in this period is how you treat people when the chips are down. And knowing how some of my competitors treat people when the chips aren't down is scaring me a lot. So we've made a promise already that we are going to do everything we can to support our clients and our brokers through this, what we hope will be a short period of time. And we're not going to try and profiteer from it and charge stupid extension fees and push people into places where they don't want to go, because that's not who we are and it never will be. And I pray that my competitors out there who have been acting slightly differently, some of them, a lot of them haven't, but some still do, that they don't use this as an opportunity to say, well, it's okay if it goes bad and you people can't repay because look at this extra income I'm now going to make. I'm going to charge them this fee, I'm going to charge them this default interest, and that scares the hell out of me. And I really hope that my competitors treat people the way they want to be treated themselves, because ultimately at the end, and I hope that brokers understand this, that we know we're going to be judged by how we act in this period, and we're going to be as fair as we possibly can.
You know what? I can't, first of all, I can't agree with you enough on that. And it's funny, even before all of this came along, one thing that you know me, I do a lot of networking, public speaking, all that kind of stuff. And I constantly get potential new clients coming to me and saying, oh, well, I've had this broker and he's done this and he's done that. Or I've had this lender and they've done this and they've done that and I haven't been happy. And people always say to me, well, surely you should see that as a positive, Sam, because that's a massive opportunity for you to win a new client. And I say, yeah, great. You can think of it like that. But actually, picking up on what you said about you hoping that your competitors do better in this industry, I'm hoping, I always hope that brokers on the whole do better. I think that as an industry, both on the lending side and on the broking side, I think that there's a lot of people out there that don't have necessarily the highest opinion of banks, lenders, brokers. And I think we all have a responsibility, and especially in times like this, to do the absolute best job we possibly can. I hate hearing when I've heard that another broker has given absolutely dreadful service or advice to somebody. I hate it. Yeah, okay, I've got an opportunity to win that client, but before I win them, I've got to win them over to the idea of using a broker again in the first place, let alone just using me. And so there's enough business to go round, and you know that just as well as me.
Yeah,
I would rather us all be in it together and do a fantastic job, and everyone build this industry up. And I think you're absolutely right, and I'm glad that you said it. I think now is a really great opportunity for us as an industry to really come together and do some fantastic work and help a lot of people out.
Yeah, I mean, listen, we're none of us are charities, and I'm not saying we should become a charity. Mm-hmm. I'm just saying do the right thing. Yeah. Put the shoe on the other foot for 1 second. People are going to go through some tough times. Your property investors, your people who run shops, people who temp, people who can't go to work. This is going to be a difficult time for the country as a whole. And I just think that this is where you get measured as a person, and where you put your head down on your pillow at night and say, I've done the right thing.
Yeah, absolutely. And you know, what I'm liking about this so far, which in certain instances has been a bit different to other conversations that I've had, some being recorded, some not, where there is a lot of doom and gloom. And I actually had a quite an in-depth conversation with another lender yesterday morning about our good friend Mr. Johnson, who I think we both agree actually is doing a pretty decent job of things at the moment. He really wasn't happy with everything, and I came off that call feeling really glum about things. So I'm quite happy that
I've got to tell you, I mean, it's not lip service. I'm genuinely excited about the opportunity that this will provide to the right people. You know, if you have a solid business with really good producers and good clients, you should be able to weather the storm. You have to all work together, but ultimately there's going to be opportunities that come out of this, and those that are there ready to grab them with both hands, great. There will be casualties as well, and that is obviously going to be very sad. It's unavoidable, unfortunately. I'm rather choosing to look at the positive side of things, and actually at the opportunistic side of things. And my number one priority right now has to be to protect the team and to protect the business and come out the other side flying. Yeah. So, let's make sure our team are looked after. Let's make sure they're healthy. Let's make sure that our borrowers and our clients are looked after, and that when the dust settles and the market resumes and everything goes back to who knows what the normal will be.
What normal is.
That we're at the forefront, and third gen becomes the first thing that people want to say. I want to go with them. Why? Because they looked after me, they looked after my clients, and they did the right thing.
And you mentioned there, obviously, you said if people have got strong businesses, then they're going to see the opportunities. We're talking about some of the investors and developers that you and I will work with on a daily basis, some of which I've been fielding calls with the last few days, and they're so focused. They're seeing it as opportunity. They're seeing loads of stuff that they can do to set themselves up for a much brighter, longer-term future as well. But you've already mentioned on this call, your background was you actually started a business pretty much going into the credit crunch. What advice would you give to then those that maybe don't fit that description of a strong business? Maybe what could people that maybe are suffering a little bit at the moment, maybe early stage investors that are now getting a bit cold feet, those that maybe entered into a deal that maybe was a little bit above them and now they're a bit sort of stressed out. Those sort of less experienced investors, should we say, that might well be listening going, that's all well and good, Mark. I haven't got a strong business yet. Yeah. I'm really trying. Yeah. What advice can you give them to where they can go?
I think the best advice I can give anybody in this period is communication is key. And burying your head in the sand, all that does is create more issues for you in the long term. If you think there's going to be issues, pick up the phone now, whether it's to your lender, to your partner, to your investor, to whoever it might be. Pick up the phone and get on the front foot. Because be it an investor, be it a lender, be it a partner, be it a client, they all want to see the same thing. Do you have a plan? If you don't have a plan, how are you going to work with people? It's all about open communication. Those people in our world every single day, the ones you have the best relationships with are with people who give you warts and all day one. But the people who give you an email here with 3 bits of information, you think, okay, cool, that looks quite good. And then as soon as you say, well, these are what the terms are going to look like, they say, oh, by the way, there's this with 3 mispayments on their mortgage. And I was like, okay, well, that changes it slightly. And by the way, they've got 3 defaults as well on the next email. And you're like, oh my goodness, just give me everything. Let me assess it, because we can assess a deal in its entirety. Just because it has a couple of warts doesn't mean it's a no. It's people like that, I think, that are going to struggle because they think they're too clever. But actually, people who have open communication lines, who say, you know what, here's a warts and all. Is there a deal to be done here? Yes or no? And some people are going to find it difficult, Sam. So, I don't want to come across as all, oh, everything's wonderful, the sun is shining, which is a wonderful thing in its own right.
Yeah.
But, there are going to be difficult conversations to be had. And you know what? Address them head on. Don't wait for them. Address them head on, because the sooner you do it, the better chance you've got of resolving it. The longer you leave it, the worse situation you put yourself in. I remember the first bit of advice, one of the best bits of advice I got from a company when I was working in Australia many, many years ago. I had plenty of hair back then. Was never ever leave a customer in the dark, and never, if you've got bad news, give it straight away.
Yeah.
Because and that's something I've lived by my whole life. So is it nice having a bad conversation or a horrible conversation? No, it's awful. But you know what? Once it's done, it's done. You rip the band-aid off and you can get through it, and you find a way sometimes to go forward. Sometimes the inevitable happens and there's nothing you can do.
I agree. Taking action, basically, is what you're saying. Is if there's something doing, get it done. And
get it done. Get it done. I mean, if you're going to give it to Boris, get it done.
Yeah, absolutely. No, I couldn't agree more with that. But talking of getting things done, one thing that certainly today, and we're recording this on Tuesday, was it 24th of March. This is day one of the lockdown, basically. And so there are some things that can't be done as they were literally 24 hours ago. And the two things that I've mentioned to other people, the two S's, which are always cause us problems as lenders and brokers, which are surveyors and solicitors.
We've addressed the solicitor's point.
Yeah,
really, we've changed the process straight away. We've changed the process whereby borrowers can be represented and advised over Skype or over Zoom or over Microsoft Teams or over Google, whatever it is. There's so many different options. But doing it in a way where if they've been represented by that solicitor before, because if they don't, how can you know whether they are who they say they are? So there will be caveats, and there'll be situations where you can and where you can't. And even when they can, we have to have independent person witness the signature. So that's going to be more difficult as of today. But you can always try and find a way. Mm-hmm. The more difficult thing will be surveyors. Although I've spoken to a number of our surveyors today who said if the property is completely vacant and somebody can let me in without being anywhere within 5 meters of me, and it's super urgent and they're going to lose money if they don't do it, then it's a conversation they're willing to have. But I'm not sure how many things are going to have to get valued in the next 3 weeks. I got to be honest. I think people will go on to proper lockdown. Mm-hmm. The only people who should be moving in this period of time is for essential workers, as they say. I mean, I'm supposed to be giving blood at 5:30, and I was so I contacted them. I said, "Oh, I obviously clearly can't come." They said, "No, you're exempt. Giving blood isn't it?" Yeah, and I was like, "Oh, great! I hate giving blood."
Yeah, but my mother-in-law did it yesterday, funny enough. So same thing, really.
Yeah, but I mean, they said, "Listen, now more than ever, we need it." And I was like, "Okay, fair enough." But ultimately, is getting a property valued because you need to do a refinance or because a purchase has to happen? No, you can delay it by a couple of weeks.
Yeah.
And is that what you want to hear? Probably not. But it's the reality. The reality is things will slow down for the next couple of weeks. We're lucky that we've got quite a big pipeline in already, so we will continue to complete deals over the next 3 weeks, and we're going to continue to underwrite deals and put ARPs out and put terms out on stuff we really want to do. Mm-hmm. And then as soon as people are able to go out, they will go out. But you have to adjust, Sam. You can't just say, that's what it was like 2 weeks ago, so that's what it's going to be like. That's gone. You have to realign yourself. This is the new world right now. And then in 2 weeks' time, we'll realign ourselves again. And in 2 weeks further from that, we'll realign ourselves again. And we'll just deal with whatever life throws us and whatever this lockdown throws us. And you know what? Hopefully it'll make us all better people.
So do you think that, if you think about the entire process from issuing terms or receiving that inquiry first off to completing drawdown occurring, do you see that the survey section being the bottleneck then, but a bottleneck that really is just going to be something we just have to kind of, grin and bear it for the next 3 weeks, really?
Depends, because I think people will come up. We're looking at some quite creative ways of getting around it. I can't give you any details right now because we only had conversations this morning.
Fair enough.
But we're looking to see, again, the world has changed. How do we change with it? How do we adapt to make sure that we support people? And we're having those conversations right now. So I hope we'll be able to come up with a couple of options for different kinds of transactions. We may not be able to, but you know what? If you don't try, you get nothing.
Yeah.
So as I said before, let's have those communication lines open. Let's start the discussions and see where it takes us.
Yeah. And what I'm loving about this conversation is the fact that, as I said before, I'm very much always glass half full. I don't really see any other way of being. How timely that you just took a sip from the glass. There we go. It's like you knew. And I like the fact that you share that. Look, thinking on the positive side and thinking about the future, what are the potential? I know it's horrible to use the word benefits when people are dying, but I can't think of any other way of describing it. Longer term or even medium term, lockdown's over, coronavirus cases are down to barely nothing, and as a country or in terms of the world, we've moved on. The next new world, as you described it, what could that look like in a positive light?
I wish I knew. If I knew that and I had a crystal ball, I would, I would love it. But listen, you know what? Open yourself up. Get ready to adjust. Get ready to do things differently. And hopefully you'll be successful.
Given that we were, as you said quite rightly, that pre-coronavirus, we as a country, certainly given the sort of turmoil with Brexit and all that kind of stuff, yes, we have been on a nice upward curve for a number of years. Maybe Brexit and coronavirus kind of maybe interrupted a cycle, but economically speaking, Brexit decision was made, strong majority government, whether you like Boris or you don't like Boris, was in place. Pound still relatively cheap, so England, UK, London open for business. Do you think that sort of quite sturdy economic foundation is going to stand us in good stead when we kind of maybe compare ourselves to the rest of Europe and maybe even the rest of the world coming out of this?
Do you know what, Sam? I hope so, but I don't know, because I don't know what's going to happen to the markets. The markets are in free fall still. And it's not just the UK, it's the whole world. So, but the pound has come down. But now they're now saying that America is going to be the epicenter in the next day or so. So what will happen to their currency and their market? Nobody knows. The honest answer is nobody can know. Yes, we were on a really solid footing. We had a proper pause when Brexit happened. Then we had a little bit of a spike. Then we had another pause. And then we had the election and another pause. It's been a little bit of a yo-yo, but it never went too far down. This is a proper correction. This is what we're seeing, and with Rick's, basically making all their surveyors put these clauses in there, which basically means the valuations are worthless anyway. We're in a completely new environment, and nobody knows how long it'll be for. You just have to get yourself out of 2019, really. Let's just forget about January, but actually you can't forget about January, because January was amazing post the election. January was incredible, and so was the start of February. But get yourself out of that mode, get yourself into, okay, it's now a post-COVID-19 world. What does it look like? Nobody knows. How long is it going to take for the markets to recover? How long is it going to take for currency to recover? How long is it going to take for the banks to recover? How long is it going to take for the overall view in terms of the positivity to return? Nobody knows. So what can you do? Leave yourself open to it. Just leave yourself open. Read as much as you can. Try and talk to as many professionals as you can. If you're a broker, talk to loads of lenders, loads of surveyors, and loads of solicitors. If you're a broker, talk to everybody else. And everybody should be just talking to each other and understanding where we're at. Because, as I've said, those who communicate will be able to have a better go at it. Those that don't are in big trouble.
It's funny you say that. I had this plan to have my podcast at some point in the second quarter. I had a few interviews kind of lined up and all this kind of stuff. And when this hit, I thought actually, and this is going to sound a little bit like I'm being a bit holier than thou, as my wife would describe me as. That's what she calls me, holier than thou. But I actually kind of thought, well, I have access to people like yourself. I've got access to some fantastic people within our market and the surrounding markets. So maybe it's kind of a bit of a responsibility that if I do have a bit of a following on LinkedIn and YouTube and whatever, and I'm going to start this podcast at some point anyway, and the infrastructure for it is there, why should I not actually have these conversations and actually record them so that everyone can hear? because not everyone is going to have access to yourself. Not everyone is going to have access to others to be able to get the kind of information that's really going to benefit them. And as much as the media can sometimes be of an influence from a negative perspective and help things from a negative point of view, you know, my little tiny iota of passing information around in a positive way, you know, maybe that might have a tiny little bit of change. And that's what I'm trying to do by you know, pushing my podcast out a bit earlier. And let's be honest, it's a bit rusty because it's not polished. It's just, I need to get this information out.
Well, that's fine, and I think people will enjoy it, and people have got more time on their hands now to listen to podcasts
awesome,
and to better themselves and to try and. I'm not saying listen to me will better themselves. In the contrary, probably not. But you know what? Everybody should take from everybody else. I've been speaking to a number of my competitors throughout the last couple of weeks because, again, I'd want to just try and understand what their take is. We're not the overall authority on what's going to happen, what's not going to happen. All we can do is look at ourselves and act accordingly. But I think what you're trying to do is good. I think a lot of people will listen to it. I definitely will, because I like to hear everybody else and hear the different views and then make up my own mind. But ultimately, I think we're in for a rough ride, albeit there will be opportunity for those that can hold their nerve.
I totally agree. And actually, do you know what? It's nice to finish on maybe a positive, you know, that nice little positive note. So before we do
positive pause.
Exactly. So I like that. You're gonna have to hashtag that on your LinkedIn
page. Nothing can replace the third gen, but I mean that might slip its way in this.
Yeah, why not? Well, look, before we head off into the sunset and in the beautiful sunshine, how can people get in touch with you if they want to, be it on social media or directly in other ways?
Yes, so I am very active on LinkedIn. It's my main platform. I don't really use Facebook at all. LinkedIn and Twitter, but it's all via LinkedIn actually, because I just link my LinkedIn and Twitter. But if they want to get in touch with us, our number's still open. My whole team is working fully functionally from home. So we have all our BDMs, all our credit managers, everybody is fully functional. So if they ring any of the numbers on the website, we publish all our phone numbers. Email address for any deals or inquiries is pretty easy. It's deals@octanecapital.co.uk. But the best portal for information is our website. Again, octanecapital.co.uk for everything third gen.
Awesome. Well, look, I'll make sure to link your LinkedIn account at the very least in the show notes. So, but look, Mark, always a pleasure having a chat with you, mate. So thanks so much for coming on, and look, good luck for the next few weeks. And
we'll catch up again soon. Look forward to coming out the other side.
Absolutely. Thanks very much.